Hello everyone. In this video, we will share essential information about corporate tax and dividend withholding tax for foreign investors planning to invest in Turkey in 2025. Thanks to the information we will share, you will have general information about how much corporate tax you will pay for the company earnings you will obtain in Turkey and how much profit distribution withholding tax you will pay when you want to distribute these earnings to the company partners, or in which cases, profit distribution withholding tax will not be paid. Let's look at first corporate tax in Turkey. Companies operating in Turkey will be subject to a 25% corporate tax on their profits in 2025. Let's illustrate this with an example. Assume a company in Turkey has a revenue of $1 million in 2025. The total costs and expenses amount to $700,000. This means the pre-tax profit is $300,000. Corporate tax is then calculated as 25% of this profit, which amounts to $75,000. After deducting this tax, the net profit after tax remains $225,000, which will be reflected in the company's balance sheet. What are the corporate tax payment periods in Turkey? Companies in Turkey report their income, expenses, and profit loss every 3 months. If a company makes a profit, a 25% corporate tax must be paid every quarter. Here is the declaration and payment deadlines for corporate tax in Turkey. If there is a loss as a result of the company's activities, income and expense and profit and loss declarations are made quarterly. However, if there is no profit, no corporate tax will be paid. Loss-making companies can offset the loss amounts at the end of the year against their earnings in the following 5 years. Let's explain this with an example. Assume a company in Turkey has a profit of $1 million in 2025. However, in 2024, the company incurred a loss of $300,000. In Turkey, companies can carry forward losses for up to 5 years to reduce their taxable income. This means the $300,000 loss from 2024 can be deducted from the $1 million profit in 2025, reducing the taxable profits tax base to $700,000. Since the corporate tax rate is 25%, the corporate tax payable for 2025 is $175,000. Now, let's talk about dividend distribution and the related withholding tax. In the event that the profits remaining after the corporate income tax is paid are partially or fully withdrawn from the company by the shareholder, a 15% corporate income tax withholding is paid by the company at source as an offset against the shareholder's personal income tax. Of course, the legal reserves that must be set aside before this profit is distributed must also be left in the company. Mandatory legal reserves are not large amounts. It varies according to the capital and profit amount. We didn't mention the legal reserves in our example now, and we will talk about it in another video. Let's explain this with an example. After a company pays corporate tax, the remaining net profit after tax is $225,000. If the company decides to distribute this profit to shareholders, a 15% dividend withholding tax must be deducted at the source. The 15% withholding tax on dividends is calculated as $33,750 to $125,000, 15%. After deducting the withholding tax, the amount paid to shareholders will be $191,250. If no dividend is distributed, the 15% withholding tax is not applied. If a shareholder is a foreign resident or foreign company located in a country that has a double taxation agreement with Turkey, they can avoid the 15% withholding tax by obtaining a tax residency certificate from their home country. This means foreign shareholders from eligible countries do not have to pay the 15% withholding tax in Turkey when they receive dividend payments. Turkey offers significant tax advantages for foreign investors through a competitive corporate tax structure and the possibility of avoiding dividend withholding tax in certain cases. Need expert guidance? Contact us today, and let's ensure your business expansion is smooth and tax efficient. Thank you for watching.